and it's the final one for the week. Thank you for joining us. Good morning. It's Business Morning right here live on Channels Television. Quite an interesting week we had. We saw the unveiling of rice pyramids in Abuja, the inflation rates for December decelerating in Nigeria, and I see UK inflation hitting a 10-year high, and many others. Now let's drill down on what's happening today in the oil market. We see oil prices fell today after rising to 7-year highs this week as investors took profits after a build in U.S. crude and fuel inventories, though overall sentiment remained solid due to concerns over tight supply and geopolitical risk. Brent crude futures dropped $1.52 to $86.86 a barrel. The contract earlier fell by as much as 3%, the most since December 20th. The global benchmark touched $89.50 a barrel on Thursday, which was its highest since October 2014. U.S. West Texas Intermediate crude futures slid $1.66 to $83.89 a barrel. The contract earlier fell as much as 3.2%, also the most since December, after rising to its highest since October 2014 on Wednesday. The recent rally in crude prices appeared to have run out of steam on Thursday when Brent and WTI ended trading session with slim losses, but both benchmarks have gained more than 10% so far this year. And back here, economic reforms could help Nigeria go far in its developmental strides in 2022, but this could be threatened by political considerations and labor union activities. This is the view of economist and chief executive officer of financial derivatives company, Mr. Bismarck Rwani. He made a submission at a webinar on Nigeria's economic outlook for 2022, which was organized by First Bank. Do take a listen.
The focus of the webinar is for 2022, but this would not go without a reflection on the economic indicators for 2021. The economic expert took time to provide a breakdown of the figures in key areas. Mr. Rwani notes that the Buhari government's economic sustainability plan was a success in 2021, and this is evident in the GDP growth rate, but the same cannot be said of the economic recovery plan. That's not all. He also speaks on the possibilities that could arise from the planned fuel subsidy.
What's the inflation rate in Ghana? What's the inflation rate in Benin? What's the inflation rate in Togo? Inflation rates in those countries are much lower than ours. However, they have deregulated petrol. The only people who will lose from PMS deregulation are those who are at Idiroko, by the border.
The real test for his presentation came during the interactive session, as participants needed to know how to take advantage of President Buhari's recent open challenge to Nigerians on agriculture.
Every megawatt of power produced in the country, the first place it goes to Mali, because the Futajalo Mountains, where the Niger River starts from, is there. If they dam that river, then we are done. That's why Doyin Salami said that from the reports that we have, and the president held on to it, and the president has kept on saying it. But words are not enough.
A panelist's review followed Mr. Rwani's presentation, during which some of his points were interrogated. And co-economist Opeyemi Agbaje speaks on what he considers the failure of the Nigerian policy environment.
The biggest failure, in my view, in the policy environment over the last few years is that we've essentially wasted an oil price crisis. And so we've gone through the entire oil price crisis, 2 recessions, and we're still as dependent on oil for our FX and for our government revenue as we were at the beginning. So that's a crisis wasted. American policy always takes advantage of crisis to do reforms.
In spite of predictions that inflation will remain structurally high in 2022 and a projected growth rate of 4.70 and 1.6% for the manufacturing and agriculture sectors respectively, it appears experts have a fair economic forecast for Nigeria in 2022.
All right, now for our first conversation. Well, the year 2022 is already shaping up to be quite interesting, with advanced economies experiencing a rise and inflation not seen in many years. Back here, AfriInvest recently released a report titled A Mix of Bloom and Gloom, a review of Nigeria's macroeconomic performance and outlook. Let's dive deeper into this report with Damilare Ashimiu, macro strategist, AfriInvest Securities Limited. Great to have you on the program. Good morning.
Thank you, Ladi. Thanks for having me on the show.
Yeah, so you got your report today, the macroeconomic review for 2021, outlook for 2022. It's quite an interesting theme there, a mix of bloom and gloom. What are the key highlights of this report?
Yeah, so on the global space, the report highlighted how the global economy rebounded in 2021. The pandemic-induced contraction in the prior year. It also dimensioned how large stimulus rollout in advanced economies complemented the increased vaccination rates there, because currently now we have a lot of advanced economies having more than 50% of their population vaccinated. So the combination of the stimulus package, both monetary and fiscal stimulus, as well as the large-scale rollout of vaccination, propped up demand in advanced economies. And this also was to the benefit of a lot of emerging markets, especially the oil producers. We saw that in 2021, global trade rebounded strongly from the contraction of about 5.4% in 2019 to about 10.8% given IMF estimates. And also we saw that oil prices touched a 7-year high. Last year, it came from an average of $44 per barrel in 2019 to hitting above $70 last year. And also, we also reported that there was increased adoption of technology last year. We saw that the pandemic has driven a lot of business activities to leveraging digitization, and also world leaders now are also putting more effort towards ensuring that decarbonization is also achieved going forward. And on the domestic scene, we saw the Nigerian economy in the first 9 months of the year rebounding by about 3.2% in real term, which completely offset the contraction of 1.9% that was recorded in 2020 as a result of the pandemic. Largely, this was fueled by the non-oil sector, which grew on average by 4.3%. And it is worthy of mentioning that services sector was the brightest spot in the economy last year, growing on average of about 5.8% over the first 3 quarters. We also strongly believe that though there was a little shivering impact from due to the emergence of the Omicron variant of the pandemic in Q4, we believe that the economy will still turn in a positive regrowth in Q4, which by our own estimate, we think will bring the GDP growth for 2021 to about 2.7%, which arguably will be the fastest or the highest since 2015.
Quite interesting. Well, I'll be looking out for that. About mix of boom and gloom, how does this describe the Nigerian economic prospect in 2022?
Yeah, so the outlook team is actually to shape the minds of Nigeria on what the expectation for 2022 is. There are a lot of events that we expect to take place this year that will catalyze the growth of the economy. We believe if each of these events are well managed, we see growth this year coming in at about 2.9%, which means it's going to be stronger than 2021. First, we see the non-oil sector sustaining consolidating on its strong performance in 2021. Especially, we see the services sector leading in that area. Our focus key sectors that will actually lead the performance include ICT. We think that the recent granting of payment service bank license to 2 of Nigeria's the telco giants will fuel increased investment there. We also believe that the passage of the PIA, the former PIB, which is now Petroleum Industry Act, will favor attraction of new investment into the oil and gas sector because this sector performed very dismal in 2021. As a matter of fact, throughout the 3 quarters of 2021 that we have seen GDP numbers, the oil sector was below the waters. So we think a combination of base year effect and a renewed interest of investors in the Nigerian oil and gas segment due to the passage of the PIA will help to fuel a rebound. We also think that the CBN will sustain some of its policy intervention. We saw the CBN late last year coming up with an 100 for 100 policy to support 100 companies every quarter that will go into production of items that will help boost domestic supply as well as attract FX. So we think that all these policies provide a good comfort on what we should expect. We also believe that the coming on stream of the Dangote refinery by H2 of this year will help reduce the pressure on Nigeria external balance, because as of 6 months of 2021, Nigeria balance current account was in deficit of about 2.5 billion, and that was largely due to the fact that we had a negative trade position. On average, annually, we spend between 15 and 20% of our commodity import exposure of FX. We spend it on importing refined oil as well as lubricants. So with Dangote refinery coming on stream, we believe this will, from H2, we believe this could mark the beginning of Nigeria's current account returning to a positive position. However, the gloom part of the outlooks could be linked to our concern on the high level of insecurity in the country. There's no gainsaying the fact that high insecurity has actually hit manufacturing and the agriculture sector the most throughout 2021. In the first 3 months, 3 quarters of 2021, pardon me, agri sector growth averaged about 1.6%, which is far below the historic potential of about 3.5%, except for Q1 when growth was above 2%. The other quarters, agriculture growth settled below 2%, so which reflects largely the impact of high insecurity that is taking place in most of Nigeria agrarian belt, and this also directly impacted manufacturers too. We saw that the performance of that sector was also not strong enough, of course, because the agricultural sector provided a lot of raw materials for this player. So we think with insecurity still in play, the capacity of the economy to deliver optimally in 2022 might be hindered. We also think that the continued apathy of foreign investors for Nigerian assets may likely taper down our growth potential, because as of H1 this year, foreign capital flow to Nigeria fell further. 2019 was our peak year of attracting FPIs. We attracted almost $24 billion. In 2020, yes, due to pandemic, we attracted less than less than 10 billion. But as of 9 months of this year, Nigeria have only been able to attract just 4.5 billion foreign capital flow, which is less than what we get in a quarter in 2019. So we think the concern around the Nigerian exchange rate policy may continue to keep foreign investors outside of the country, and this will not really go down well with the exchange rate. So these are the things that we think could fuel the gloomy outlook, plus political dynamics, given the fact that 2022 is a pre-election year.
Right. That's quite concerning, looking at the foreign direct investment there. But analysts have expressed divergent views on the 2022 budget. What, in your view, are the likely impediments to actualization of the budget?
The truth is that the 2022 budget is actually not very big. If we are to look at it holistically, Nigeria has a population of over 200 million. The budget is 17.1 trillion in naira. In dollar terms, that's just about 41 billion. If you do that as budget per capita, what you get is that the budget for each Nigeria in 2022 is just barely above 107,000. So it means the federal government budget for you or for me is just 107,000 in a year. However, the problem with the budget has to do with legacy problem, the inability of the government to generate revenue on one part, and also the distribution of the budget itself. It's quite interesting that recurrent expenditure accounted for about 40% of this budget we're talking about, while debt service will go up about 22.7%, statutory will take about 5.2%. So what is left to drive the capital expenditure is just about 32%. And this is what needs to be scaled up so that growth in Nigeria will be sustainable, so that we'll be able to create more growth. So basically, we have structural problems that may likely affect the performance of the budget, especially as regards to how well our revenue target, because the best we've done before 2021 was 4.9 in 2019. As of 11 months 2021, we've actually done 5.5. But we think the best that will come will be about 6 trillion. So government aiming at achieving 10.7 trillion revenue may not be achievable, which will widen the deficit gap and also impact on our borrowing. And also, we feel that some of the assumptions of the budget look quite a bit optimistic. Yes, the oil price benchmark of $62 per barrel looks very decent given the dynamics in the global oil market. But in terms of the GDP growth projection of about 4.2%, we think it's a bit optimistic given concerns that we mentioned earlier, the insecurity, the exchange rate concern, and the weak capital flow into the country. But we think that if Nigeria could put its house in order and we put politics aside and allow the economy to be managed properly, we could see growth surpassing 3% in 2022. So basically, the hindrance just has to do with things that could be dealt with if right policies are put in shape, and if government also think realistically in terms of its revenue projection.
Okay, maybe starve the recurrent expenditure a little there. But, you know, the Monetary Policy Committee of CBN would have its first policy meeting for 2022 next week, Monday. What is, you know, AfriInvest's expectation on monetary policy direction for 2022, and what are the factors you actually considered?
Yes, from our perspective, we think that the CBN will actually hold policy rates unchanged, especially in the first half of the year. And the reason being that Nigeria is actually, in the middle of a difficult situation. Yes, there has been increasing hawkish tone in advanced economies, but most of these global systemic central banks have actually not started implementing the raising of interest rates. So what we've seen so far is scaling down the level of stimulus in the country. So, and given the fact that Nigeria growth is quite still fragile, yes, we're expecting the growth to be about 2.7 this year. But if you net off the effect of the contraction in 2020, the real growth for 2021 will just be about 0.7%. So the central bank will not do any good for the economy now, increasing rates. If we're talking in terms of raising monetary policy, because it will raise the cost of borrowing for businesses, and this will also have negative effect on employment creation capacity. And if you look at our unemployment numbers at above 33%, that's not quite decent. So we think that also the current level of the reserve provides some level of comfort for the CBN, at least to keep the exchange rates decent for the first half of the year, because we believe that the global systemic central bank will not become aggressive with their tightening agenda until middle of the year. So we don't think the CBN want to go ahead of this other systemic central bank. They want to play in tandem with them. They want to take the necessary step or implement the necessary policy action towards H2 and not in H1.
All right, so very quickly, what's your expectation, performance for the equities market this year? We've seen it's having a rally right now.
Yeah, so last year, the equities market actually missed our projection by just 10 basis points. We projected that the equities market would deliver 6%. It did 6.1. So for 2022, we believe that with the right mix of good environment for businesses to try, we think the market at base case would deliver about 7.3% in return. And in a best case, when we have favorable policies as well as decent catalyst report from the government, as well as the reduction in COVID-19 distress, we think that the equities market could also go all the way to deliver about 13% at best case.
Okay, and just one more question now. Global inflation on the rise right now. As an investor, how do I beat global inflation?
Yeah, so one thing is to invest in assets that can actually outperform what the inflation is. What I mean is that strategic investment is key at this point. You have to understand the dynamics of the economy where you want to invest. what is the current inflation rate there, what is the strength of the currency. In a country or in an economy where the country is highly subjected to quick currency devaluation, it will be very good for investor there to have their portfolio to be diversified, a mix of equities and fixed income. This is where professionals are needed, professional advice are needed, because there are actually some sectors of the economy you can invest in their stocks, and these sectors on average will outperform the economy come rain, come shine. So a mix of a balance of a portfolio mix would deliver excellent performance for anyone in 2022.
All right, I guess we have to all gather and beat inflation right now as investors, because it's not looking pretty cute there. So, Damilera Shimiyu, thank you so much. Macro strategist, AfriInvest Securities Limited. Thank you for coming on the program.
Thanks for having me.
All right, now after the break, we'll get an outlook for fintech and legacy banking in Nigeria. That's at the moment. Just stay with us. Welcome back to watching Business Morning live on Channels Television. Now to our next conversation. Well, banking in Nigeria remains an attractive sector with over $9 billion in value pools. But despite, high levels of competition, the vast majority of consumers are underserved, lack of access to services, especially in the rural areas. Issues of affordability and poor user experience all contribute to frustration consumers experience right across the customer spectrum. This has created an opening that fintechs have been quick to take advantage of, with many stepping up to develop enhanced propositions across the value chain to address pain points in affordable payments, quick loans, and flexible savings and investments, among others. Let's talk to Damilola Olukwono now, analyst, Chapel Hill. Dan, I'm great to have you. Good morning.
Yeah, thank you very much for having me. Good morning.
Yeah, so the management of Stanbic IBTC recently announced that they are setting up a fintech subsidiary. What do you think, necessitated that move?
All right, thank you. What necessitated that move is the need to bridge the wide gap, which currently exists. As you all know, the number of unbanked Nigerians, are still very much elevated. And we've seen, the fintech players, just pitch their tent, in the banking space. And some of them are started recording successes, on that front. So what Stanbic has just done is just to respond to the competition, from the fintech players. And, over the last 2 years, the banking earnings have not been impressive. In fact, last year, Stanbic reported lower profit after tax. And, this move is one, in an attempt to grow its customer base. And secondly, is also in an attempt to ward off competition from the fintech players.
Quite interesting. But do you see other banks, towing, similar path in the near to medium term?
Excuse me.
Sorry.
Yes, I do. In fact, Guarantee Trust Holding Company, has also announced that they'll be setting up a fintech-focused subsidiary as well to respond to the competition, in the fintech space. Access Bank also announced that they'll be pursuing an holdco structure. Whilst we don't have details of the subsidiaries that will be under the holdco structure, I would imagine that fintech would be one of the subsidiaries, they'll be looking to create, under the holdco structure. So, and, the banking system currently is moving from the normal brick and mortar banks to digital banking. So what we are now seeing is more banks, more banks are now pitching their tent, towards enhancing, their digital offerings to customers, as it has been proven that you can reach more customers, via the internet or via providing various financial digital products than you would do if you were just situated in your normal brick and mortar branches. So I think more banks will embrace this development, and we would see more banks, both in the tier 1 and tier 2 space, just set up fintech focused subsidiaries, to expand their market share and to also ward off competition from the fintech players.
All right, Dami, but how big of a threat are the fintech players to traditional banks?
I would say they are somewhat a threat, as we've seen the kind of volumes and values of transaction that some of these fintech players are currently recording. And but then I think the banks have what it takes to also give the fintech players a run for their money. If you look at most of the fintech players, most of the banking, the big banks, for instance, you look at their customer base. Citing Access as an example, Access has over 42 million customers, which means that they would be able they will be able to compete favorably, in the fintech place or in the digital banking space, if they decide to toe that path. So whilst they are a threat, I think what the banks just need to do is to move faster, like we've seen for the likes of GTCO, Stanbic, and maybe Access Bank. I would want to see more banks, just set up, fintech focused subsidiaries, before it becomes too late, and before it becomes very difficult, for them to catch up with the fintech players. So while they are a threat, I also think the banks are able to compete favorably, if they're able to move fast.
Yeah, but positioning is key, for that to happen. But which banks do you think are better positioned to thrive, against fintech competition right now?
Yeah, I think the tier 1 banks, generally, looking at the size of those banks, and the fact that most of those banks, have a Pan-African outlook. They have subsidiaries in various African countries. So I think, the tier 1 banks, the likes of Access, GTCO, Guarantee Trust Holding Company, Zenith Bank, UBA, and First Bank and the likes. I think they have what it takes, to succeed, in that space. Just looking at what First Bank, currently is doing with its First Money mobile agent, I think is somewhat impressive. And like I mentioned before, GTCO has also set up a fintech focused subsidiary as well, and other banks are beginning to respond. So for me, in terms of the banks, that would do well in that space, considering the number of customers, the size of their customers, and considering, the value or how rich their digital products are, I think currently the tier 1 banks, are better positioned, to thrive. That's not to say that the tier 2 banks, won't also compete favorably. Wema Bank's alert, is currently posting very impressive numbers. We've seen the likes of Fidelity as well, just launch various digital products as well, and that's seen a very high level of customer acceptance as well. And other tier 2 players are also doing a lot, to also enhance, their digital offering as well. So I think generally, Nigerian banks are positioned to thrive, but I think at the moment it's a case of who is able to move faster and who is able to expand, their market share in that space.
Quite interesting. And the real sector, players need credit to scale operations, to contribute meaningfully. So how the fintechs, how are they matching up, talking about credit?
Yes, we've seen, some fintech players, just expand, their offerings, beyond the payment offering or payment system offerings. We've seen them, just expand their offerings, towards the credit side. And one of the major issues, we've had to grapple with over the last 2 years is that we've seen, most banks, just take the back burner, when it comes to creating credit or expanding credit. And I think that's due to the risk, the economic risk, that came with the coronavirus pandemic, and all of that. So I think it's a good one, that the fintech players are also pitching their tent, towards expanding credit, to the real sector, and also expanding credit, to retail and corporate customers. I think it's a good one because that will help foster economic growth. And it will also consolidate, on the commercial banks' effort, to create credit, to the real sector, and more importantly, it will also enhance CBN's initiative, which one of it is has always been to foster economic growth, via creation of credit, to the real sector. So I think it's a good initiative.
All right, but one of the big selling points for digital banks that they've used to take the market by storm is free transfers. Do you see major banks taking up that this year?
I think it would be a struggle, for the traditional commercial banks, to introduce incentive, like free transfer. And the reason why I said so is, 2021 was a very challenging year for most banks. A lot of them reported, uninspiring earnings performance. And I think at the moment, most banks, are currently aggressive, when it comes to creating their earnings, and when it comes to also ensuring that on a year-on-year basis they are able to deliver strong earnings. Excuse me. So I think it would be a very tough decision, for most of the traditional commercial banks to give initiative like free transfer, and they might come up with other initiatives. But in terms of the free transfer, except we see other fintech players, just pull that part, and we are starting to see that have negative effects, on the patronage of the traditional commercial banks. Except we start to see that, we might not see most traditional commercial banks, just hold that part.
Right. Anyway, we've seen, most of these fintech companies, raise record amounts, regardless of the headwinds. What's your outlook for 2022?
Yeah, in terms of the fintech players, I think the outlook is positive. If you look at the Nigerian market, for instance, financial inclusion, is somewhat very low, at the 40 to 50%, levels. If you also look at the number of unbanked Nigerians as well, it's also very high. So the Nigerian market, appears to belly, a lot of opportunities, for investors who are looking to set up, various fintech offerings in Nigeria. So I think from that perspective, I think it will be positive, for investors looking to invest in that space, and we might see more fintech players, coming into the Nigerian space. And generally for the Nigerian banking sector, I think 2022 would be a better year, relative to 2021. Although bulk of the pressures we saw in 2021, still exist. But I think the banks will be able to weather the storm, better in 2022. Considering the fact that on a year-on-year basis, interest rate is expected to be elevated this year. And for the tier one players, who have large retail deposits, that might be positive, for their net interest margin, going into 2021. And also in terms of the macroeconomic outlook as well, 2022, appears to hold some promising rhetoric, for the Nigerian economy. So I would expect that from an asset quality perspective as well. I would expect that the banks will find it easy, than they did in 2020 and 2021. So generally, I think the outlook is somewhat positive, on a case-by-case basis, depending on the makeup of the bank's balance sheet. I think generally the outlook is somewhat positive, and I think banks should perform better. Yeah.
Okay. All right. Thank you so much, Damilola Olupona, the analyst with Chapel Hill Denham. Thank you so much.
Thank you very much for having me.
Enjoy the weekend. All right, now let's take a look at what's happening in the market with Anyete. Anyete, it's all about new highs there.
Yes, Ladi, it's all about new highs. Well, if you're talking about the equities market, it moved all the way from a 4-year high to a 13-year high. But before we go there, we'll go first to the fixed income market, and that's on the bond market space. It still was rather mixed at the close of yesterday's trading on the FMDQ. So, and that comes amidst sell-off on the March 2050 bond, which it increased by 5 basis points. But it's interesting to know that the first tranche of the bond, of the FGM bond for 2022, was oversubscribed by 13%. And of course, that means that investors paid about, it went up by 139 billion naira. And at the end of the day, what we got was more than 200 billion naira for the bond, for the first bond issue issued by the Debt Management Office this week. And of course, at the same time, the Debt Management Office issued 150 billion naira worth of bonds to investors. So we would see how investors will be looking out for that, especially next week when the Central Bank's Monetary Policy Committee will be meeting. Of course, we had inflation report this week, and of course, they will be looking out for this, the Central Bank's next move at the upcoming meeting between Monday and Tuesday. And for the Treasury bills market, it still remained largely muted, so we're not looking at that. Let's take a look at the open markets operations. It was, it didn't have much activity there, just about 4 deals carried out yesterday. And then at the central bank's special bills, 6 deals was carried out on the 2nd of May 2022. That's all for that market. But moving over to the Nigerian stock market, like I mentioned, this is the level that it achieved at around September 2008, just before the market crash of, if you remember that time. But it had crossed to about 65,652 points as at February of 2008. But here we are back again. We're at 45,890.52. That's the level achieved in September. And as at yesterday, we were up by 1.01%, which translates to about 248.04 billion naira. Now, it's interesting to know that in just 3 days, we've been able to gain about 750 billion naira so far this week, which tells you that this market is really, really rallying its way into new record highs, or new highs, as you put it. And it comes amidst investors' interest for the shares of Dangote Cement. Of course, we also had, earlier in the week, Boa Foods, as well as some other bellwether stocks. Let's flip over to the sectoral performance. It's slightly a mixed bag there, but the greens still have it. We had 27 gainers against 9 losers. So that tells you investors are still keen on Nigerian equities market, and especially when you take into cognizance that the full year result for 2021 is just around the corner. So that is also expected to shape the market's direction towards the green side. Well, of course, some will be announcing dividend payments for the year. So, of course, investors are really prying into this market, particularly the foreign investors. In terms of value, it's still green, like I mentioned. The volume of shares transactions carried out yesterday was up by more than 245%. At the same time, the value was also up by a significant margin, as well as the number of deals carried out for that market. So I can go ahead and tell you more about this market, because it's more of an economic indicator for Nigeria's economy. Just recently, the SEC, that's the Securities and Exchange Commission, commended the Nigerian Exchange Group, as well as the Central Securities Clearing System for their collaborative efforts in making Nigeria's stock market to rebound or to maintain its resilience amidst the COVID-19 pandemic of between the year 2020 and 2021. Now we're in 2022, so we're expecting that this market is still going to go up. Now, before I close the day, this is what the smaller unlisted securities market printed. It's been flat for the last 3 days. So that's just all about that market there, Ladi.
All right. Well, I guess it's a road to the 50K level for the all-share index. We'll keep watching that. Thank you so much.
I can cast my bet on that.
All right, now we'll take a break. Now we'll come back. We'll get to London. That's in a moment. Just stay with us. Welcome back. Let's head to the UK now. We see retail sales data is out for December. Let's hear more from Juliana. Great to have you, Juliana. Good morning. So it's a 3.7% drop in retail sales volume for December, and analysts didn't expect this. It's bigger than what they actually expected.
You're right. Good morning, Ladi. It's much bigger than expected. In fact, as soon as the Office for National Statistics released this retail sales data, the FTSE fell as much as 1% because the 3.7% drop in retail sales last month is actually the worst performance for Christmas on record. We know that December is the time where retail usually reap all their rewards of hard work for the rest of the year. The biggest drop has come from non-food sales. They fell 7.1% month on month, and petrol sales fell by about 3%. This is all down to Omicron and the Plan B measures, which were confirmed by the Prime Minister in late November. Over 5 million people were working from home, meaning they weren't out. And of course, we know supply chain issues has been a major talk of the media. So lots of people, the savvy shoppers, were buying up all of the deals in November. We also had Black Friday, which meant that shops were left pretty much empty in December. Not great news for the Chancellor.
Yeah, keep breaking records in the UK. There. Another news now, we see UK government is planning to invest about £100 million in car battery manufacturing startup. That's a British Volt. I guess the battle to secure enough batteries ahead of 2030 is on.
It is. The British government have committed, in principle, £100 million, which is part of the automotive transportation fund, and it's part of the Plan B for jobs. There's a Plan B for jobs because we know that so many viable industries are becoming very, very lucrative, particularly the electronic vehicle battery. Now, this is going to provide this Northumberland plant the opportunity to make 300,000 batteries each year, which, as you said, is part of the transition to net zero by 2030, when we know that petrol and diesel cars, the new cars, will be restricted here in the UK. So, yes, this is good news. This has been held by the Prime Minister as well as the Business Secretary, Kwasi Kwarteng.
All right, Juliana, I guess we start saving for our electric cars now. All right, Juliana, thank you so much. See you at 1:30. Enjoy the weekend.
Thank you.
All right, let's take a look at what's happening in the crypto market. We see it's a bloodbath this morning with Bitcoin losing that $40,000 level. We see Bitcoin started to decline below 43,500 resistance against the US dollar. Look at the market cap there. Lost the $2 trillion mark. It's down 8%. Whole red in the market right now. 24-hour volume traded, $98.97 billion traded in the total crypto space. It's up about 37%. That's on the sell-offs we see there. Bitcoin dominance, 40.15%. Let's look at the price of Bitcoin this morning. $38,652. Massive drop there. And you know, once Bitcoin goes down this high, you know, altcoins are going to be ruptured there, down 2 digits for sure. 24-hour volume, $34.49 billion traded in Bitcoin. Ethereum losing the $3 mark, $2,800, down 9%. Volume traded, 18.34 billion. It's not looking pretty in the market right now. Let's look at top horse by market cap. It's, see, BNB there, $424. All red there. The BNB there, down 10.76%. Massive drop. Cardano was having a rally, but that's in the back burner now. $1.23. It's down 9.95%. Solana, you see Solana there, $124, down 9.29%. And XRP, it's been ranging between the 70 cents and 80 cent level, but now it's lost that to 68 cents. See the top 5 gainers. When you see stable coins on the gainers, you know the market is in trouble. You see Leo there, $3.76. It's up about 2.52%. USDP, one of the stable coins there, $1, just 0.08% up. BUSD, $1 USDT, $1 USDC. So those are the stable coins, all looking good in the market. Let's bring in Michael Inaji now, financial market analyst. Great to have you, Michael. Hello, Michael. Hello, Michael, can you hear me? All right, let's go back to the losers counter there. We see SCRT there, down a massive 20.19%. It's at $7 there. LRC, Loop Ring, one of the old ones there, down about 15.15% at 99 cents. And Harmony has had a good run for the past weeks now. It's at 25 cents. It did get above the 30 cent range, but it's down massive 13.91% this morning. And we see Gala there, one of the play-to-earn platforms there, 24 cents. It's down 13.30%. And we see Near Protocol there, down 13.21%, also at $14.37. So it's a fully red market we have today, Friday. And I and Ini always talk about Fridays. Fridays can be quite bloody, but she missed the call last time, but it seems the call came rather late and quite heavy. All right, I think we have Michael now. Hello, Michael. Hello, Michael. Can you hear me now? Oh, yes. Yes. Great to have you, Michael. Thank God it's Friday, but not a good Friday in the market today. See that bloodbath going on there. But, you know, historically, we've seen Bitcoin has maintained, you know, a kind of correlation, you know, with the traditional asset class, you know, especially the Nasdaq. What does this mean?
Yeah, so there's the reason behind the downward move in the Nasdaq is mostly due to the hawkish comments that you saw Jay Powell and the Fed basically usher in the last couple of weeks. So what basically is going to be happening in the next couple of weeks is there's going to be substantially more rate hikes than the market was expecting, and so the byproduct of that is that you're going to see highly speculative growth stocks, which is mostly what's comprised of the Nasdaq. Investors starting to rotate from growth into what they call value stocks. And the rationale behind that is that in an easy money environment, it's very easy to deploy capital and try and grow the growth, try and spend money, cheap money on growth. But when the Fed dials down on that inflation risk, the companies don't have that easy money anymore. And so the segue to that for Bitcoin is one of those speculative assets on the investors' balance sheets. So they're more likely going to trim down that as well. And so that's why you see that correlation playing out. And in an environment where the Fed starts hiking rates, all growth stocks, all speculative plays are all one. So at the end of the day, it doesn't really matter whether it's Bitcoin, Nasdaq, Google, Apple. Like you saw yesterday, Netflix was down 20% because they couldn't beat the street's estimates for growth. And so you're really seeing these growth stocks and growth type of assets get punished in this hawkish environment. And so it's something that I have to watch out for.
But it looks like traders are seeing Bitcoin as some kind of tech stock.
Yeah, exactly, because they have to see it that way because of Bitcoin is this belief that we're going to get everyone on this base layer of currency that everyone in the world can use and plug into. So it is a high beta play because people are looking at it as a source of growth for the monetary system. So people are tending to price it as a growth stock in this environment that we're in. So that's why you're seeing it pull back so greatly.
Quite interesting. The first congressional hearing on Bitcoin mining took place yesterday after the U.S. House subcommittee scheduled it to get, better understanding of the environmental impacts of the industry. What was said?
Yeah, so a lot was said, and it was from the Energy and Commerce Committee in the House, and a lot was said in the sense that it was mostly positive. You saw people like Brian Book, former OCC chairman and the president of Bitfury, come in and basically quell a lot of the misconceptions that people have about crypto. So a lot of the crypto mining is done from the cheapest energy sources because of the competition involved in mining. So you have to go for the cheapest energy. And also another important point was that they tried to make the point that Bitcoin is used in a lot of these renewable sources as a way to substitute for demand when it's stranded assets. Have something like solar that isn't being used. A lot of the time you have Bitcoin miners going to go get that stranded energy at the cheapest cost. So if the U.S. wants to enter a sustainable mixture of energy, they have to substitute Bitcoin whenever that energy is stranded, to make it the most feasible use of energy mix. So Bitcoin is one of the few things that you can use to substitute whenever the energy is stranded. So it's one of the good ways of you making profit if you're running a energy company and you don't know what basically to do with your resources. So that's kind of what it tried to explain to Congress, and also the fact that it's a huge center of job growth. Bitcoin blockchain jobs were up like 340% last year.
Right.
That's mostly to do with the influx of capital that came in.
Okay.
So it's a very good way of substituting the energy mix and making the push into sustainable energy a thing in the future.
All right, Michael. Thank you so much, Michael. Enjoy the weekend. What's left of it this Red Friday?
Thank you so much. Happy Friday and happy
Friday. Thank you. All right, now, so it's extreme fear in the crypto market right now at about 15 points, looking at the fear greed index. All right, that's it on the show today. Thank you so much for watching. I'm Ladi Williams. Remember to join us at 1:30 for Business Incorporated for more news in the world of business. Thank you so much for watching. Bye for now. Enjoy the weekend.